No, this just goes back to your goals is that just figuring out where you wish to be. And then from there, is you can reverse engineer, okay, I want to just be in single family. I want to be in multifamily. Or if you're looking for a more scalable model, then single family may not be the best bet. And then consider looking at multifamily. But if you're someone that is a little bit trigger shy or not as confident with actually, and you're working towards your first deal, then that could be okay, starting with single family. Then you start to get momentum and the snowball effect. Then you build that confidence and then can shift to multifamily.
Welcome back to the Real Estate Syndication Show, where I continue the conversation with Sterling. And he is sharing and being so transparent about so many things that I'm learning so much from. I know you are as well. I hope you have liked and subscribed to the show, whether you're listening on YouTube or on your phone, one way or another. We would appreciate a comment and a 5-star review as well. So please stick around. Sterling shares many great tidbits that are going to help you to improve personally and professionally and to getting to the next deal also. Sterling, welcome back. Man, we've had some great discussions from, your childhood to just some hard times, how you came out of that, to college, to getting into real estate, to finding the mentor and how he helped you find that, get into the first single family deal, to finding a business partner, to then how you've scaled finding deals, to even sending, potentially, maybe you had never done this, I'm not sure, but sending a seller a potato to get their attention.
I did not personally send them a potato. It has come to mind a couple times.
So grateful for the conversation and just us diving into some different topics that I know you're an expert in. And again, 150, single family homes to, pivoting, right, in a big way. You scaled that, and that definitely didn't happen without a lot of hard work and a lot of dedication to make that happen. I know very few people who have that many single family homes, right? They've built amazing business, even local, and local to me here, that I know are like, man, they're the single family guy. They know this city like the back of their hand. They have 150 single family homes scattered all over. But man, you pivoted then and said, you know what, I think I have a better path. But I want to jump into that, and maybe you can help us think through some things to consider when deciding, whether that investor or whether they should invest in single family or multifamily. It's a question I get often. I'm sure you do as well. So help us think through that.
Yeah, I'd say I wouldn't call it double-edged sword, but I pull from both ends. That if I were to go do it all over again, because this is a common question I get too, is would you still start with single family? Yes, because it was a lower barrier of entry, and I was able to get my foot in the door, and then the snowball effect I was able to get from that. And then I was able to use a lot of that single family experience, especially at that scale, was significantly easier when it came to multifamily. So that's what I would say. But then it just comes down to your goals and where you're wanting to go. Because someone could easily be, let's say, 5, 10, or even 15 properties, just single families, and be financially free. So that's another thing is on the side of you're wanting to have a more scalable model from that, and you're doing syndications, then that's something to consider is whether single family is the right thing to do, especially if you're doing self-managing. That's when you would actually more consider or look into the option of multifamily.
Man, yes. I know there's so many things that are, like personal things you got to figure out, right? What are your goals? Where are you trying to go? But I think often, man, it's just assumed that you have to start with single family. Is that what, do you feel like you almost have to start that way?
Not necessarily, but the thing that can be daunting for most people is, I'm trying to think at the time is when I started single family is what my mindset was, or I don't even know if I considered investing in multifamily at that time, but just saying that it could be pretty daunting to purchase multiple units at once. So that could be why I wouldn't say recommend, but the single family side is just from a mental standpoint, that it's just one unit there, you buy that, and then let's say you buy the next, and then you from there, okay, now I'm starting to get more comfortable. I understand the model. It's less risk because if you go to 10 units, for instance, that's 10 different residents now that you have on your plate. So that could be daunting to someone versus just one resident. You get familiarized, and then you start to grow from there and say, okay, this is simple. I understand it. It's not as difficult as I thought. Okay, now I could be able to start to go to larger deals.
Awesome. And so I speak to why multifamily now, why invest in multifamily and not just stay at, single family?
Yeah, I would say why not multifamily for everyone? And well, Whitney, you're in the space of you're familiar with why, but it's just The amount of transactions, so 110, 120 transactions from the single family side in order to get to about the 150 single families, and then bought as of recent 156 unit apartment complex, which was just one transaction and all 150 units in one location. And then so there's that. And so that's what I would say is the biggest benefit from those two is really just the scalability and then also the economies of scale. And then I would say the return on time, your ROI on the time is better as well.
Yeah, I think that's something so many forget about, right? Is the time that it's going to take. They think, oh, wait a minute, why invest in this deal when I can go do that myself, right? Well, you might be able to do it yourself, but man, if you count all the time spent, the time you spent finding those 150 units, 150 single family homes, right? I mean, there was so much time invested in that versus finding this one transaction, which still took a lot of time, but still probably a lot less than finding 150 single family homes, right? To find that 150 unit apartment building.
And that's another belief and a fear, of course, but it goes full circle that I also had to remove is the value of time. And one of the things I've learned, and it took so long for me to hear it, it was Grant Cardone that said this. He would say, rich people buy time. And for the longest time, I did not get that. But this was one point where I was at the amusement park. It was Kings Island. And I was with my little brother because I'm a part of it was Big Brothers Big Sisters, where I actually get back my time and mentor someone who's actually in the environment that I ended up growing up in. And so I was there with my friend and business partner, Jacob, and he had his little brother. And I say, hey, let's go ahead and get the fast passes. Trust me, we'll need those. He's like, I don't know. I said, just get it. So when we're there, park first opens up. And the fast passes didn't really matter as much because there's not many people at the park. But then as the day starts to progress, the top rides were about 2 hours long for the general admission. But us for the fast passes, it was just 10 to 15 minutes. And then that's when it really just sank. Okay, that is the value of buying time. And just time in itself is yet. So that's one story I want to share with people when it comes to that.
That's a neat analogy to think through that as well. You could spend a little more money on that ticket. So, man, you gained a ton of time back. And yeah, we're better able to utilize that day as well. And so it's a neat statement there. So return on the time, I had this call or this investor called me one time and he said, I'll never forget, he and his wife were on the phone and they had owned the single family home for a number of years. I would say 6 or 8 years, but just the timing in the market, they sell it, they make, $350,000 on this one single family home, right? Because of what's happened in the market. And so during the call, they're like, well, why wouldn't I just go do that again? And I said, well, how many of those can you find? Do you have the time to go find more single family homes? And guess what? You bought that how many years ago, right? That's probably not going to happen over the next 3 or 5 years. Maybe, I don't know, it might, but either way, do you have the time to go find those deals? Do you have the time to manage those deals? Do you have the time to take the tenant calls? Just like we forget about that, right? Well, no, I can go do it myself and save all the time or save all the money. Can you? You don't really think through the time invested. So what about, transitioning from single family to multifamily? It's so common that somebody does start, with a single family home or small multifamily, but especially a single family home and moving into multifamily. Any thoughts on, transitioning, from one to the other, whether it's the mindset, whether it's the skill sets needed or even the team needed? Let's walk through some of that.
Ooh, yeah, luckily had the single family experience at that scale. So was able to build a property management company to manage that many single families. So the transition wasn't too difficult to that very first deal of 46 units. It was actually easier to manage that than all the others, but it did come down to different skill set in underwriting the deals and understanding how they're exactly valued. Because a single family, as an example, is okay, that sold across the street for this sold across the street for this. It's comparable property to this. It's also 3-bedroom, 1 bath, such as mine with the detached garage. But on multifamily, as you're looking at cap rates, okay, based upon the net operating income, okay, this is the cap rates of properties that have recently traded in this area. Okay, now you can reverse engineer to determine what the value of the property is, which is entirely different from the single family side. So I would say that those differences, and then also is the channels. So was doing some off market on the single family, but did a mix of on market too. So it was a mix of on market and off market. But then when with the multifamily side, it was just strictly off market because this was in 2017 where the market was really starting to heat up. It was going through brokers and it was just not penciling out and even close to penciling out. So, okay, took a step back. Why not beat the brokers to the punch and actually go direct?
Yeah. Why don't you beat them to the punch and go directly? Incredible. You mentioned, the value and how we value multifamily, single family. I think that's a common, just misunderstood, right? When you're first starting to think about doing a bigger deal. Speak to cap rates a little bit. What does that mean? Or how would you explain that more on a basic level? What a cap rate is and maybe how we use that just a little bit without getting extremely technical at this moment.
Yeah. So without getting too much into the technical side of things, it's just in essence a way to value the property. So as an example, I don't have my calculator on me, but is if the ROI, I don't know if you're able to pull this up, but is if the ROI, not the ROI, but NOI on the property is, let's say $300,000, then you would take that, I believe let's say the cap rate is 5%, then you would divide it by 0.05. And then that's how you can reverse engineer and determine what the actual purchase price is. So that's how you would, in essence, look at the cap rate.
Okay, that's 6 million.
Yes, there we go. So in essence, that's how you would look at that.
Yeah, so that cap rate can change things so quickly, right? I mean, it's
yeah, and that also comes into play is that when you're valuing the one, what you could purchase the property, but also forecasting in the future, okay, what I believe I can sell this property for. And this is the slippery slope that we've been going into in the most recent years is that people have been believing, which has been the case, cap rates have steadily been compressing. But do now, especially at the time we're shooting this, do you still want to bank on cap rates still compressing, especially with the rising interest rates and some uncertainty in the future? But then you have some people that are still buying deals based upon that, which is fine. But then you just have to protect your downside that, okay, if cap rates don't keep compressing, let's say you're buying it today at a 6 cap and you're going to say in the future, I believe I can sell it for a 4.5, 5 cap. And that is your conservative model. That could be a little bit slippery, but if that is your aggressive model and it still works on a conservative level at, let's say, a 5 cap or a 5.5 cap, then there we go. So that's why I would say how that factors into on the multifamily side.
Yeah. There's a lot to think about there. And let's say is the 300,000 NOI, and let's just talk about like say a value add. We all hear that term, right? Value add all the time. What might be a typical amount that we're trying to raise the NOI to? Like 20,000, 25,000, 50,000. What do you think would be a good number, just a ballpark to throw in here so the listener can help think through what we're talking about?
So, and this comes to the technical side when it comes to the math, where this is out of my not having the strength on this, but you're just saying, I would say, let's increase it 50,000.
Okay. So 50,000. So is that 300,000 at a 5 cap? That's 6 million. So if we put 350,000 at a 5 cap, all of a sudden the value is 7 million. And so
there we go.
I just think it's valuable for the listener to hear, wow, if I can increase the income, right? I mean, that's how commercial real estate's valued, right? If we see value there that, hey, this previous seller did not capture, we can go in and capture that value by putting in better operations, right? Lowering expenses and whatever it may be. It may be a dog park, or it may be covered parking, or it may be some kind of trash pickup, all these things, right? Or just better units so we can, raise the rent to market rent, like those things. But $1 million difference. And that's not adjusting the cap rate, right, at all. But then I wanted to go back. So 300,000 at a 5 cap. Well, let's say it goes to a 4 cap over the time that you have the project, but we've not increased the income at all. It's 300,000, but a 5 and it goes from a 5 cap to a 4. All of a sudden it went from 6 million to 7.5 million.
There you go.
Right. Yes. So yeah, that's why we have to know some of those things about the market we're in, right? Without getting extremely technical there.
Yeah. And this is the other question that also comes up is, where do you get that information on cap rates? And it's one, experience, which doesn't help for people when they ask the question as well. Okay, I don't have experience. But the second is from brokers. And you just ask them, okay, well, and just doing research, but also having conversations with brokers and seeing, okay, what are properties trading for? And then seeing how they previously were over the years and then how they are now. And then you can see a trend. And then you just have to make, what do you call that? It's an educated guess. Because even when we're forecasting the future, we'll say, okay, we think cap rates are going to keep compressing, or maybe they don't keep compressing. It's a guess based upon, because who knows what's going to happen in the future? I mean, maybe some operators out there, I don't know. So you're just making an educated in the future, but then you're also just protecting your downside in the situation that doesn't end up panning out in the future. And that's the uncertainty that we're facing in today's market when it comes to forecasting deals in the future, because there's so much uncertainty. That's what's going on.
Yeah. Yeah. No, that's incredible. I just like that example, right? Thinking through how we can increase the value or what cap rates do to the value of the project. So people can think through, like your example, even that you used, you have that single family or even a duplex, right? That the value is based on the comparable properties. You raise the rent $20. Well, guess what? That's $20 more in income, right? And the value doesn't really change, based on that, right? I mean, they're going to still be looking at comparable properties versus if you have that 150 units and you raise each unit by $20, $25, right? It's such a bigger difference.
Exactly. And it also varies on your buyer on the single family side. So if you have an investor coming in, they'll look at it as more of that, but oftentimes the incoming investor of your property isn't as of that sophistication. So they'll also still be looking at it more as, okay, this sold across the street for this sold across for this. But however, on multifamily, it's strictly looked at, okay, these are the numbers, because it is a business in itself, even though single family, that also is the same in a way, but still multifamily, it's more predominantly look at that because those are the types of buyers that are actually buying those type of assets.
Awesome. Sterling, anything else you want to leave us with when somebody's thinking through single family versus multifamily that the listeners should be considering before we have to close this segment out?
No, this just goes back to your goals, is that just figuring out where you wish to be. And then from there, as you can reverse engineer, okay, I want to just be in single family. I want to be in multifamily. Or if you're looking for a more scalable model, then single family may not be the best bet. And then consider looking at multifamily. But if you're someone that is a little bit trigger shy or not as confident with actually, and you're working towards your first deal, then that could be, okay, starting with single family. Then you start to get momentum and the snowball effect. Then you build that confidence and then can shift to multifamily. So there's a lot of variables that go into that. But yeah.
Incredible. Sterling, grateful for just the thought, thinking through, 150 single family homes, some amazing experience there that helped you, no doubt, scale in multifamily, but even thinking through how somebody, if they didn't get to 150 units or single families, how they can still pivot, they can still make that transition. And maybe they possibly need some creative financing like you came up with, many times, to get that deal done. You found that seller that he was motivated in some way, and you didn't stop when he said, hey, it's going to require this. Yet you kept pursuing him, and you came up with some creative financing ways, which we are going to get into next. Hope the listeners will stick around. Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the #1 resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.